Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the Trading Floor with your humble host, Jeremy Alexander Richmond, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What's up, traders from all around the world? How you doing this fine, majestic Monday afternoon? It is indeed January the 4th, about 4 o'clock my time, 5 o'clock Eastern. And we're here to look at the retail sector, but most importantly, look at some swing trades and talk about Mentorship Monday. That is what day today is. The first Monday of every month marks the opportunity for each and every one of us to talk about what makes real life trading real life and what we can expect. I kind of break it down, talk a little bit about what real life trading is, how the trading floors work, answer any questions you guys have. A lot of traders feel, I wouldn't say embarrassed or overwhelmed, but they feel worried if they ask a question that may seem, beginner. Well, today is the day to ask those questions without hesitation, right? If you have a question, write it in, type it in. My opportunity is to answer any questions that you might have today. That's what Mentorship Monday is all about. So ask a question if you have one. I do a little bit of housekeeping, and I kind of break it down for you and all that kind of good stuff. John says, thanks for the invite to the room. Pleasure to have you here. Martin, hello, Mr. Martin. Victor says, hello, everyone. What's going on, Victor? Dave in the house is going. Big Al here for the first time. Linda Boshin, ladies and gentlemen. Trading legend joining us. Oh, man, this is a good day. Soon I'll be able to email everybody. This is great. I love it. Linda, happy to have you here. Eric, what's going on? Big E, hope you're doing well. All right, got a poll open. I'm more or less just interested to see what you guys think about this poll. Let me close it in 5, 4, 3, 2, 1. Closing the poll, and I will share the results. I think that's the way this works. Sharing the results, you guys should be able to see it at this point. So 34% of you are most interested. I'll put over here for the recording students so they can see it. I do record this session for our subscribers. So if you are interested, maybe you work full time, probably have a job, have kids, have the wife, have the husband, have things to attend to. I do record every session that we have in the afternoon from 5 to 6 Eastern. It's an hour-long recording, sometimes a few minutes additional, and I email it to you at the end of the day. So this is recorded, and our recording students can see this poll. The majority of you are interested in tech. The rest is energy. No one cares about retail. Even though retail is moving pretty nicely today. Financial was the next, and transportation is the next after that. The reason I was asking is because those 5 are the sectors that we do kind of focus on a little bit during the afternoon swing trading class. So Monday is merchants, which we do talk a little bit about retail stocks. We go look for some retail trades and that kind of thing. Tuesday is Tech Giant Tuesday. It's usually the most packed day in the afternoon because, like I said, everyone is all about tech. So that's when we look at Apple, Amazon, Netflix, that type of thing. Wednesday is Energy Wednesday, Thursday is Transportation Thursday, and Friday is Finance Friday. And those are just stocks that we generally look at. Now, the good news is, for anyone who is here or remains to be here this week, next year, next month, you're welcome to type in any stocks you want me to look at, and I'd be happy to do so. So this show is really built off of mainly requests. So if you have a stock that you're requesting, if you want to know and you want something to look at specifically, you're welcome to type it into the chat pane, and I'll be happy to help out. What I usually do is if you type it into the chat pane, I'll put it in the list for the next day. You can always email me. Once the show gets started, I more or less have all of the stocks that we're going to look at for that day already outlined, and I get it all timed out in my head, and then the next day is the next stock. So all that kind of good stuff. Just type in a 1. Make sure everyone here knows where the chat pane is at, and we'll get started with some analysis. Just throw some 1s on the board. Make sure I got it. Colleen Weaver. Oh, man. Pierre is here. Sybil is here. Liz is here. Nolan. This is like old times. Oh, yeah. This is great. So pumped. All right. What we're going to talk about, usually in the first 5 to 10, sometimes 15 minutes if it's a really interesting day, we look at the general market ETFs, the SPY, the DIA, the Qs, and the IWM. So we'll see. John says, I assume since you sent the invite, you're allowed to talk to all people now. Not quite. Not quite. That's coming up soon. It's not really talking, it's just emailing. Mostly emailing. Big Al says, SPY and IWM, where do you, Jeremy, see strong resistance to short? We'll talk about that as well. So we're here. Let's go ahead and talk about it. So, SPY, where do I see big resistance to short? Well, here's what's interesting. I'm going to turn off all the lines and type in a 1 if you see a descending channel of some kind. Any kind of 1s in the house? Yeah, there's some 1s, and there it is, right about there. It's my best drawing with my left hand, something like that. This is the SPY. So you're making lower lows, right? So here's a low, here's a low, here's a low, and here's a low, and we're making lower highs. Here's a high, here's a high, here's a high, here's a high. What do you guys think? Type in a percentage, if you will. What percentage chance you think that's going to happen? I know some of you guys are getting tired of me being the bull all the time, but I think it's mid-70s. Steven Jackson has 79.999%. Patrick has 80. Liz has 80. Martin has 70. Stan has 75. Karen has 78. Rick has 70. Wow. Dave has 95. Nolan has 60. Holy smokes. Those are some high percentages. Pierce is going up and then down after. Bobby has 50. I like a lot of you guys' percentages. I think there's a really high chance that's what happened. And let's talk about why. Let's discuss the why. The why is each time in the market we've broken these supports, these lows. So really the support, I'll put my lines back on the chart. The support is coming in about this 201 area. We've broken this once, twice, 3 times now. And we keep bouncing. I mean, we close below it. So we're making lower lows, we're making lower highs. But every time we make a low, people try to hop on bearish, and then it pops bullish. I just simply think that we're going to move up a little bit. I do. I think we are. We were very, very patient on trades today. I want to give you guys a giant high five for anyone in the morning trading room. We didn't take one trade. And I think that was a fantastic job by all of us together. And the reason I say that, Nolan, is because we could have taken a lot of bearish trades out there, and truly, we would have gotten slaughtered. And I say slaughter, we would have lost an R or 2. But we didn't lose anything, and that's great. It's really, really solid. So what do I think is going to happen? I think we trade up a little bit higher from here. So my analysis as of today, I think Tuesday, Wednesday, we head a tad higher, likely into 205-ish. Jason Chase in February calls. Eric B in a condor. And that's about it at the moment. Tomorrow, if we were to gap up, so let's just say that SPY gaps up to 201.85. That is a strong resistance. I do anticipate some selling there tomorrow, Al, to answer your question. I anticipate a little bit of selling there. Plus, it would be a bullish retest gap. White candle gapping up. So anyone who did buy here would be likely selling, and then we probably, again, fill this gap a little bit. If I want to short this market, again, I'm probably going to look to short it in this little trend line area, this little resistance around 207.50, 208. Right when everyone starts going bullish, let's go bearish. Now, to answer Karen's question, because that's really the question that's like, everything is riding on this not happening. You'll hear me say the term very often, one candle changes everything. And the reason I say that is because as active traders, if we are swing trading or specifically day trading the market, One candle really will and can change everything. If tomorrow we open below today's low, let the slaughterhouse begin. That's going to trap everybody. Everybody getting trapped. If we gap down tomorrow and open, I don't know, around 202, we'll probably have a small inside day candle, and I will be really, really pumped for Wednesday. So if I had to guess what I think happens, I would say high 70%, let's say 78.61349% as we gap up a little bit and trade down tomorrow, even if it's just a skosh. So we'll probably get a candle that looks like this tomorrow, except maybe black, or maybe we'll get one like this. So I think we gap up and trade down a little bit tomorrow. Bob says, I don't think so. Yeah, we'll see. I don't know. We'll find out. That's just what I'm guessing. But we'll find out. Steven says, did China unfreeze the market before it closed? No, it closed 2 hours early because they were just getting absolutely just destroyed. So if China continues selling off, it's going to be a little bit bearish. But this is pretty much the same analysis that I had and that we had back on the 14th of December, ladies and gentlemen. Very, very similar analysis. Buy low, sell high, and don't be afraid about it. So anytime the markets are pulling back, buy the dips and understand the gaps. This is a black candle gapping down. It is a retest gap. I fully anticipated a lower wick today. We talked about that numerous times, that we would likely get a lower wick today in the market, and we did. Big Al says, when the markets are not showing strong trends, the short-term traders make their money setting traps, in my opinion. Yeah, it makes total sense to me. Absolutely. I mean, this is, all of this, this is very similar to this. 2014, January, December, November, 2015, 16. Trappy. So breakouts, short-term breakouts, not playing them. Whatever you are playing, play the retest and just be cautious and understand that whatever everyone else is doing, probably do the opposite. Here's the IWM, which is the Russell 2000, or the ETF that tracks the Russell. Now the Russell did have a little bit of a black candle today. I like the Russell if it pulls into 108.21. Here are my lines. I'll kind of zoom out a little bit for you. 108.21 was a strong support back in June 2014, strong support in August 2015, October 2015, and maybe January 2016. If it pulls back into there, boom, boom, people might probably go bearish into that support, and then again, buy low, sell high. Breakouts have been terrible, and they will continue to be terrible in 2016. If I could come up with one just blanket statement for the market all of next year, do not take breakouts, take the retests. Breakouts will be terrible. What do I mean by that exactly? Well, let's say that the market does this. Okay? Taking the breakout would be going bearish right there. I think that would be a terrible idea. Maybe it works, but I probably would stake my career on it. That would not happen. Right? You get a lot of buying to close. Stocks would come back up, retest. That's the location that you want to go short, get a better risk-reward ratio, and let's see if the market continues to roll over from that point. Type in a 3 if you're feeling me on that. 2015, we have seen it time and time again. It has happened so many times. It was uncanny. All-time high breakouts failed over and over and over. About as many times as I failed organic chemistry. It just happened all the time. So whatever you're trading, if it's a stock, if it's an ETF, if it's an index, don't take breakouts, take retest all year. Here's the Qs, QQQ. So again, the Qs, a lot of people probably did not wait for a close today. They probably got in bearish. This is a pretty nice little hammer candle. Unless we open below tomorrow's, let me rephrase, unless we open tomorrow below today's low, I think we go a little bit higher. The only thing that would make me change that is a perfectly nice inside day candle tomorrow, and then maybe Wednesday. Then if we break lower, it's game on. thankfully for you guys, we can be here all week. We'll look at the SPY, everything as well next this entire week. Here's the DIA. DIA did trade down nicely to a little bit of a support. I had a buddy, a good friend of mine, Troy. I wonder if Troy is here today. He is not at the moment. Let me text him. Troy. DIA did bounce. Nice, man. So a lot of you were looking to go bullish today. That's fantastic. Troy texted me, and he was looking to get into this bull put spread at 9:20 my time, which is 10:20 Eastern. So again, this little gap down, I think, was a pretty decent long opportunity. A lot of volume came in today, ladies and gentlemen. I think we trade up higher. I think people are going to want to short here, and really the time to short will probably be up in this resistance again. I say be a little bit long, unless we get a gap down tomorrow. Karen says, so if the Q's open higher tomorrow, would you go long intraday or wait for the 3-day pattern? Tomorrow, I would wait for the pullback. Yep. Good question. Just like I mentioned a little bit earlier, if we gap up tomorrow, it is a bullish retest gap. I have no problem going long intraday tomorrow. I'm just going to go long on the pullback. So let me hop in here to the hourly chart. And this is, again, the DIA, and I'll kind of sum it up this way. So here's your little hourly chart. Let's say the DIA gaps up tomorrow, 0.5%. I'm expecting a sell-off. And I'm going to buy that bounce and place my stop below today's low. It's pretty much going to be the setup I'm looking for. Pat Coffin, what do you think? Is that what you're going with, girlfriend? I want to be in the ring. I want to be in the side that Pat is. That's where I want to be. She says, yep. All right, sweet. Yeah. Woo. Rock it on. So with my swing traders and day traders, this is a very, very important time frame that a lot of people do overlook is the hourly chart. Hourly charts don't necessarily give me the entries on swing trades. The hourlies and the dailies mostly help me with timing. And when I say timing, it helps me figure out, okay, am I going to do this tomorrow, the next day, that type of thing. Al says, on a bullish gap, I will go long on a retest of the open. All right. You know what I like about that, ladies and gentlemen? You know what I like about Al? He has a plan. That's all we can do as traders. We come up with plans, and we follow them. So whatever the plan is, I love it. A lot of traders will email me quite often, and they'll say, hey, is this plan good? And, sometimes I'll make a few very, very small tweaks. But overall, plans are always good. The biggest concern that I have is, are you able to follow your plan? And a lot of people find it very difficult to. And I'm not saying it's easy. It is hard, especially in trading. And the reason it's easy is because there's so many choices and it's so easy to trade. Isn't it? Right? Again, Mentorship Monday, first Monday of every month, it's a little bit slower. It's a lot of talking, a lot of questions, a lot of analysis, a lot of big picture, real life stuff, and then we hit it hard the rest of the month. Mentorship Monday is a little bit of a slower day. The reason I bring that up is because I am going to be talking a little bit about trader expectation the majority of the day. That's what a lot of people want to talk about. But what's really, really interesting to me is how easy it is to trade. It is so easy to trade. There are myriads of trading opportunities. There are myriads of trading opportunities every day. If you want to go to a restaurant with your family, how many restaurants can you go to at one time? You can go to one. You can go to one restaurant at a time. Once you're sitting down eating, you can't really be in 9 different places at the same time. However, with the stock market, you can, and you don't even have to leave your house. You can be in 9 trades at one time and don't even have to leave your computer. It's so easy to trade. And it's so hard not to trade. That's why overtrading will destroy a lot of traders' accounts. Because even if you trade profitable, let's say you're a 50-50 trader and you do 100 trades, and you're literally 50-50. So you do 100 trades in the year and you're a 50-50 as a trader. Or you placed 30 trades in a year and you won on 15 and lost on 15. Who do you think is going to be the more profitable trader? All else equal. Believe it or not, this guy. Much more than likely, that person is going to be more profitable. Why? Commissions. You know? Commissions is a big deal. Commissions, time spent, slippage. I mean, commissions eat away at things, right? It helps you focus. You can stay in your really, really big, nice winning trades longer. If you have left of them open. Fewer opportunities for loss. Yep, all of those things. It's just always something to keep in mind. Less is always going to be more in trading. That's always something that we want to keep in mind. And it is so easy to trade. It's so difficult not to trade. And it's just one of those things where the difficult aspect of trading often wins out in the end. So how about we do this? Mondays are usually, again, Merchant Monday, where I do discuss a lot of the retail sector and anything else you guys want to talk about. Let me pull out my handy-dandy little trading stock worksheet journal thing that I haven't looked at in really in 2 weeks. Give me 1 second. Here we go. Give me about 7 more seconds. Skip that one, skip that one, skip that one, skip that one, and skip that one. Okay. So here's what I wrote down to look at today. KMI, SLV, gold, and Solar C. So those are the ones we're going to look at. Let me also write down a few more that I have on my list. Is there anything that you guys want to look at today? Lulu, WSM, Chipotle, Nike, and Men's Warehouse. That's what I have written down earlier. USAO, Gold, UPS, SO, IB, GoPro. Smith & Wesson, Apple, Target. Okay. Looks good for me. And JetBlue, let's put JetBlue on for Thursday. Transportation Thursday. I'll look at JetBlue on Thursday. Sweet. Let's go scroll through these really quick, and then the rest we can discuss a little bit. Again, just trader expectations or any other questions you guys have. And again, the broad general market. This is the retail ETF, which I often look at on Merchant Mondays. XRT. The retails did have some bullish candles that came in today, and I like the lower highs XRT is having. I like the support presented by 41.68. I think that retail has a lot of accumulation to do, and it's probably going to stay within that range for a while. It's not looking super healthy, which means it could probably just trade neutral to bearish with a very, very slight bullish flavoring on it. So XRT, again, some type of big triangle forming with a really strong support around 41.68. Gold and silver did have some big moves today. Gold gapped up. So gold and silver gapped up today and did get a lot of selling pressure. So here's SLV. And really, the only trades that we've had on silver are very, very long term. So the only long-term perspective I have on silver, if I can present you one, is this one right here. Long-term trend line on silver, you had a ginormous triangle back there, ginormous triangle right there, and ginormous triangle right there. So 3 triangles back to back, and we're continually making lower lows and lower highs. I think we continue to go down. I don't know exactly how much farther. $10 an ounce? Probably. That makes a lot of sense. We can see if that's exactly what happens, but I don't really see any specific reason for it to be bullish per se. I don't have the exact trade set up on silver or gold, but if you're longer term bearish on the ETF, cool. If you're in shares, you've just been doing covered calls the whole way, I like it. Karen says, can silver do a reverse split? It could. They're iShares. I don't think it happens. Because SLV tracks pretty closely to spot silver price, which is really about $13, $14 an ounce, I believe. I don't think they do a reverse split. It could happen, but I'd be a little shocked about that. Nugget did a reverse, but Nugget was a leveraged ETF, if I'm not mistaken. I believe Nugget is a 2x or 3x. I could be wrong about that, but I'll check it out in just a second. But anyway, so silver, heading down a little bit lower. Here's gold, GLD. And again, gold broke its primary trend, or a primary trend. So here's the primary trend on GLD, in my opinion. Something kind of like this. We had one that broke down right there. And this is really kind of like the last trend line, and it broke that one down as well. So right now we're trading sideways on GLD. I think GLD is like a no-brainer. It makes it somewhere into 97.56. Again, I don't have an exact trade set up on GLD or silver, other than if you are trading it, I'd have a bearish tint to my analysis. Short the pullbacks, whenever the pullbacks occur. If you get some gap ups or you're looking for some trades, I'd probably go with bear call spreads or something just slightly bearish on metals. So since we're talking about Nugget, here it is, ticker symbol NUGT. So yeah, so Nugget is a leveraged ETF. So yeah, so they will have some reverse splits from time to time. Right on, right on. Okay, KMI, which I'll also put on the docket for Wednesday since it's an energy. KMI is one that a good friend of mine, Ken.net, did some put sales on. It's at 15.27 was the close of today. He did put sales that expired, what was the close of that candle? 14.92. So let me put this one in here. Ken. So both of your put sales expired on KMI. What's next? Anyone else have any other trades on KMI? That was really about it. So you had one, Nathan says he has shares. All right. Nathan Moss has shares of KMI. Probably long term. He said Nolan got out last week. Alrighty. Earnings are coming up. This is broken. I mean, the all-time low or support was 23.46. I don't know exactly what's going to do with earnings, but I mean, you'll hear me say this on energies. A lot of energies are, without question, they're very speculative, number one. Number two, longer term, I do not see them going anywhere. And they would be in the, hey, I want to buy this, I don't really care what it does, 4 to 5 years portfolio. That's really what I think about energies. So Nathan and Stan have some shares. All right. Stan, Jay, and Ken did some put sales looking to get into some shares. And not so much. So Kinder down to 15.27. Really just accumulating down here. It's probably going to have a final pop to really shake some of the weak bulls that are looking to get into them. And then the stock trades down a little bit lower. I think energies still make one lower low overall. And then something goes on with it. Dave says more like 45 years. It's possible. It is possible, depending on what the energy stock is, but they're going to have a lot of work with pipelines coming up. Nolan said too many people are protesting their pipelines up here. In Canada, Nolan, that's what you're at, right? I think it's Canada. He says, yeah, British Columbia. Yep, a lot of protests going on with, Kinder Morgan up there. Yeah, I think that longer term, I mean, they're an okay place to buy, but really it's just going to be all energies. That's really where they're going to be at. It's just energies in general. A lot of people feel good about them long term. And as crude and everything has been going down, solar has been getting a little bit stronger because people are, I think, depending on the presidential election, that's going to have a lot to do with the energy. I don't know if you want to call it the energy crisis, but energy stocks. It's really going to depend on who gets elected. We'll talk more about that on Wednesday. Bottom line, I don't have any exact trade setup on KMI. If you want to know, since it is Monday and you're saying, I wonder what Jeremy looks for to have an exact trade setup, I need a gap. If I'm looking for his trade setup, I need a gap. I need something to really, be amazing. If someone says, hey, Jeremy, I want to do a trade setup on a stock, this is the stock, then I'll look at it and I'll try to find what they could be looking for. Otherwise, like if I look at this stock, if someone said, hey, I'm going long on Kinder Morgan, then I'll pull up Kinder Morgan and I'll try to find a long setup for them. I'll do that. But if it's just in a stock that you're requesting, want me to look over, I'm going to be pretty biased with it. And if it's nothing there, then I'm not going to do a setup. It's really the way it works. Nathan says, I followed a huge options trader in KMI, 50-60 call spread in early 2015. Crazy, right? 50-60. Oh, was it a bullish or bearish call spread? I was going to say bearish call spread. That would have been a great trade. But yeah, it is unbelievable that Kinder Morgan's all the way down here at the 42 range. Oh, gotcha. Bullish. Yep. That's a long-term option trade, too. Jeez. Well, really, I mean, here's honestly what happened to Kinder Morgan. You ready for this, guys? I can sum it up in one word. Well, not really one word, but I can sum it up like this. All-time high, breakout, failure. That's really what it was. That, and you got a cute little head and shoulders pattern on Kinder Morgan. But I'm not saying like I went bearish at the top of KMI. I really didn't. I didn't get any strong signals until right about there. But I was not bullish. That's for sure. We were not bullish on KMI. All right, sweet. Solar City we can look at pretty quickly, but we have that one on the list also for Wednesday. I will say Solar had some really bright trade setups today. I liked First Solar City, and my thought was really they look more bullish to non-directionally bullish and could be good for some put sales, maybe some share ownership and doing some covered calls, something like that. Both Solar City and First Solar. I feel the same way about both of them. So for Solar City, 47.28 was the really strong support that I don't want it to break. I do not want Solar City to break the 47.28 support. If it doesn't, should remain bullish to neutral. Could be nice for put sales or covered calls. That's really about it. So if you're looking at this trade, and remember, if I'm looking for a swing trade, what am I looking for? A gap. And that is a gap right there on Solar City. Black candle gapped up, bullish gap and go. Now, here's something to keep in mind that very few traders talk about. But I think it's pretty important. Why do I say bullish to neutral here when obviously it's a bullish trend? When I say obviously, I mean if you're looking at the exponential moving averages, the trend is bullish. Why do I say bullish to neutral? I can take two answers. Go ahead and throw the answers my way. What do you guys got for me? Now this is just reading my mind. There's a few traders in here who for somehow can read my mind via the internet. Karen's one of them. So she got point number one correct. She goes, resistance is right overhead. That's one reason I said bullish to neutral. So Dave is on point. He said that descending triangle. Yep, that descending angle. So that's the neutrality that I'm seeing coming in. So you got that trend line coming down. Anything else? Karen says, and yeah, not bearish on it. Yep, not bearish on it. You're right. Here's what's interesting, though. I'm going to talk about these guys. What am I pointing to? The prices. Let's talk price for a second. Solar City. This is not a pharmaceutical company. This is a solar stock owned by Mr. Musk. Has increased in value over 100% in 2 months. 100%. So yeah, I'm neutral because there's probably going to be some selling coming in at some point. You guys get what I'm going at? I'm not saying it can't go a little bit higher, and I'm not saying that it won't, but you just have to realize, I mean, geez Louise. That's a huge growth. Lily says, why did it drop? Well, I can explain it to you based on the technical version. Technicals, you have a very strong support at 47.28. When the August flash crash occurred, everything came down and it broke that strong support, came back up and retested, and just got so much big money shorting at 47.28 that it caused it to roll down. So that's one. The other one is Karen says, sure. There's all the folks who bought it last year and still in the water and trying to jump out. Yep, that is correct. Patrick says, is it usual that gaps get closed? Yes. Most gaps do fill at some point. Especially if it's a retest gap, right? So a black candle gapping down or a white candle gapping up. Retest gaps fill much more. Black candles gapping up, right? That's the gap and go. Those can fill, but don't have to. One of my mentors said all gaps fill at some point. Her name is Anne Marie, by the way. All gaps fill at some point, but some point is in quotation marks. Like there's gaps in Amazon when Amazon was at $67 a share. It's going to be a while before Amazon does any gap filling at 67. You know what I'm saying? That's kind of what I'm going at. Is that some gaps can fill at some point, but things have to really happen before that goes down. Karen said, folks were figuring out that if oil was cheap, nobody would be interested in the pricier solar power. I mean, that's the thing, is oil is so cheap right now. Gasoline is cheap. Oil is cheap. Utilities are going lower. It's not expensive. Karen says audio's in and out. Audio in and out. Why is that the case? Testing. Can you guys hear me? Audio. Patrick says same here. All right. Give me a second. I wonder why that is. That's strange. Talking about solar flares. Maybe that's what's going on. I don't know. I will hardwire my internet in. Maybe that'll work. Pat says, glad, good no, it's not my hillbilly internet. Nope, I don't think so. Perfect. All right. If any audio goes down again, just let me know. Just keep me posted. I appreciate you guys throwing that my way. So, Solar City, First Solar. We're going to be looking at those more on Wednesday as an exact setup, but that's my thought process, as I am a little bit more bullish on those overall. Okay, let's check out, since we're talking about energies, we can look at USO really quickly. Linderman said, had the leaf blowers been by today? Oh yeah, of course, man. Have the leaf blowers been by? Justin. Oh man. There's a running joke, ladies and gentlemen, it's not an apartment complex, homeowners association, whatever. The running joke is I say running joke, it's not a joke. I have a team of leaf blowers who work for the HOA fee. They are the hardest working group of individuals I've ever met. I'm confident if we put them in charge of any political group ever, everything that we would want to be done would be done in about a week and a half. These guys blow leaves like it is their job. About 10 hours a day, every day, Monday through Monday. They were here on Christmas, on New Year's, Christmas Eve, New Year's Eve. Every single day they blow leaves from like 6 a.m. to like 6 p.m. It's uncanny. One leaf anywhere in the parking lot, they're here. And it's not a big apartment complex or housing unit. I don't even know what you would call it. It's not that big, Karen. They just, I don't know. They're determined. They are determined. All right, here's USO. I'm still bearish on it. Still bearish on USO. No reason not to be. Trend is bearish. Don't fight the trend. The trend is your friend. Stock will gap pretty often because it's, trade 24 hours. Karen's a good reason to be bearish on USO. Yeah, it's, trend is bearish. My ultimate target is $9.01. So again, I do think Energies makes another low just to really shake out all the bulls out there who keep trying to pick the bottom, and it gets in a 2-3 year accumulation phase, and then all is well, and it's just kind of boring from there. Let's go through a swing trade. I do have one on Lulu that I'm keeping a really close eye on. My boy Timmy threw this one out there today, and a few other traders are looking at Lulu as well. I do like Lulu. Let's talk about why. Remember, I mentioned if I'm going to be talking about any kind of swing trade, I'm making anything official, there's got to be a gap somewhere involved. This is gapping. So it did gap up. It's a bullish retest gap, right? White candle gapping up. It closed above resistance. I wouldn't call this a double bottom necessarily. It's a little big for a double bottom, but it did make a higher low and it did make some higher highs. Now, if you come in here to the hourly chart, you had a nice black candle yesterday, and the stock gapped up. One of the few stocks that was up today. So my thought process on Lulu would be, if we can get a pullback, I think we can go bullish on this trade. Again, it is a bullish retest gap. I'm going to pick someone at random, and I'm going to have them feel the pressure, because I do this sometimes. I ask you guys if you want to make it official or not. Here's what I'm looking for on Lulu. A buy the bounce. Remember, breakouts have been terrible. Limit buy. Leave that trade open for... Trade is active for 4 or 5 days. Meaning that would be remain open. Let me find somebody. You know what? Dave. You've been really active today, my man. To make this official, yes or no? On Lulu. 54.42 buying the pullback. So what's the target? Target 1 is 59.77. Says yes. All right, ladies and gentlemen. We got Dave's approval. We're looking at this trade earlier today. I can dig it. Let's make it happen. Lulu, potential swing. All right. This is a bullish retest gap on the daily chart. So I do anticipate Lulu possibly pulling back some. Hourly gaps are gorgeous. EMAs on the daily are bullish, and R to R is nice. Lulu, real life trading. Boop. You know what? There we go. It's an official trade. So now what we do is we will track that trade for our members, and I'm gonna put it in the worksheet that our subscribers have access to, and we'll follow it. So today, wow, first swing trade of 2016. Lulu, 54.42 limit buy with a stop at 53.38. Again, this can be done with shares. If you like to trade shares, this can be done with calls. If you're doing calls, I'd probably do at least minimum February. Expiration, yeah, February, probably the $50 calls, $52.50, something like that. Now, this might not trigger, but I'm going to leave it active for at least 4 to 5 days and kind of come back and see what it's doing and see if we need to update or adjust or anything. Again, it might not trigger, but looking for a little bit of a pullback. You could kind of adjust this trigger if you wanted to, maybe make the entry a little bit higher, see if it can pull back. I think the higher entry is more likely to fill tomorrow. If it's a higher entry, the higher the entry, the more likely it fills tomorrow. I do think we pull back. That's a great risk reward if it works. So we'll see. All right, that's Lulu. Lulu, done. Nike, ticker symbol NKE. So Nike has had it split. So with Nike, I am excited about the split. I think it's a good thing. I think the stock was getting a little bit too overpriced for what Nike is. It is a shoe company after all. Even though Phil Knight has made it a $27 billion company or something like that, it's pricey. It's a pricey shoe company. I think Nike is in a big distribution phase. It has had earnings not too long ago. I'm thinking about doing another put sale on Nike. We had another one the other day. By the other day, I mean a few weeks ago. It was just absolutely gorgeous. I think I'm going to try this one again. Now that the split has happened, maybe take advantage of some of the weird option prices. Let Nike pull down, but I think it's in a channel. Maybe a little bit of a distribution phase, kind of a buy low, sell high opportunity on Nike. So I'm looking here for the January 22nd. And 59. Where is 59? Okay, 59 is decent. And then the 57.50. 57.50 is not bad. You get about 30 cents. That's the one I want to go with, though. January 57.50 put sale. Oh wait, hold on. I'll do it like this. Oh gosh. Oh, I chose the wrong line. Oh good. Oh no. All right. Put sale. Coordinates 57.50 January 30-cent limit. Okay. I think Nike is in a channel distribution phase. Buy low, sell high. All right, that's what I got. Not huge premium. There's no bank robbing going on there. But truly, I wouldn't mind owning shares on there, honestly, if it does happen. Nike put sale January. One could also consider the 59 if you can watch it closely. 1% of stocks premium is there. I'm kind of neutral on Nike. I like the split. I think it's a good thing. I'm not massively bearish on it. I think it just needs to pull back a little bit, and we can kind of take it from there. So that is an official put sale. Now, again, if you don't trade naked options or you don't know how to trade put sales or you've never done them before, I'm happy to help you learn how to do them. They are in a very advanced strategy. And I will say as often as I can, do not do these unless you have no problem or issue owning the stock. If you can't afford to do the put sales, never have, don't want to, not interested, then don't do it. Just really be careful because I like them, but that's just because I'm in the markets all the time and we keep track of them and we can see what they do. Speaking of credit option, credit spreads and things like that. Here's the trading journal that we keep track of, and this is a pretty cool thing. I don't know, Pat, if you got a chance to check this out or not, but I know you're a big options fan. These are the credit spread results for all of 2015. So 17 losses, 174 wins, total number of trades 191 all through 2015, and the return on the investment was 422.19% in 2015 doing credit spreads and or put sales. So with those options, there's no denying that the average win and the average loss are pretty skewed. That's just the way credit spreads work. Okay, but we did track every single one of them. We did post every single one of them, and you can see that there were 2 months that we got hit pretty hard. But it's just about consistency. I mean, you take small wins consistently all the time and do your best to mitigate the small losses or the losses that do occur, and results speak for themselves. All of them are logged. Swing trade results. So really, we only started tracking these since July. So this is where kind of the trading expectation comes in a little bit, is you got to kind of understand just what to expect. And I can count on one hand how many companies I'm familiar with that do track all of their trades. But I'm not talking about just like the returns, but the exact trades and the analysis at the time that we were looking at it. Dave is saying, are they all based on gaps? Some of them, not all of them. A lot of my credit spreads and option plays that I do are usually selling. I usually sell options and buy shares. They're usually based on gaps, but sometimes more than that, they're just based on support and resistance, long-term moving averages, and maybe gaps, maybe candles. But so swing trading, 42.55% return on risk since July. And the day trading results is really the one that people like the most, because a lot of people don't do credit spreads. They may not be familiar with options, but we started tracking this since February. So since February, percent growth is 195% if using 2% risk on day trades. So those are our results, and I do track. Like I said, I'll follow up on the trades. Once they're in, and we are very accountable on those setups. If people get put to stock, we walk them through. We do all of that. It's very, very accountable. That's what trading, what we need in trading. So speaking of accountable, UPS is going to get close. UPS is going to get close. I got a January put sale on UPS. It's a 92.50. UPS is at a support right now. I forget the trade. I think it was Lily or Yossi. I forget the exact person. Someone was asking me earlier today if I wanted to go short on UPS, and I said no. Reason being is because it's already sold off over 10% since November. And with oil prices being as low as it is right now, and UPS really focusing on transportation, we can see how strong the support is, right? Type in a 1 if you can see that. From there, I have no idea if UPS is going to bounce or not. All I know is it's at a strong support. We can verify the strength of that support. So if it does bounce, let's be bullish. The last time that I looked at it, I said, hey, if we can make it down into 94.41, good buying location, very strong support. So did a put sale. It's still out there. Expires in 3 weeks. I don't know if I'm going to get put the stock down there or not, but if I do, I'm not going to be terribly afraid of that. 94.41 is a strong support. Let's see if UPS can bounce there, and I will keep a closer eye on that for Thursday. So it's not week 1. It's regular January expiration, which is the 22nd. All right, what I'm going to do on these is we got a chance to check out a few. Let's write down what we're going to look at tomorrow, because I do want to talk, again, just a little bit about what I want to talk about today for the last 5 minutes and get you guys ready for Tech Giant Tuesday tomorrow. What do you guys want to look at tomorrow? Dave says, when you sell naked puts, are you focusing on dividend stocks? The majority of the time, but not all of them. Not all of them. Stan says, Southern Company has a February 44-43 bull put spread. It's over earnings, but it does not gap that often. Let's look at that Wednesday, my man. I'm going to put down the list for Wednesday, and it's also on the list for tomorrow. I like the bull put spread down there, but it feels kind of weird. It'd almost be an iron condor worthy since it's out of resistance, you know? Meaning if you're going to trade over earnings, you might as well do the bear call as well, since it's out of resistance on ticker symbol SO. Bill wants me to add FireEye to the list. Yes, let's look at Amazon, Netflix, Google, Tesla, LinkedIn, and we have room for one or two more for tomorrow for Tech Giant Tuesday. Baidu, JD's on the list. Yahoo is on the list. Okay. Baba and Intel, you got it. Done. And Facebook. All right, that is it for the day. For tomorrow, that's what we're looking at, guaranteed in the afternoon for Tech Giant Tuesday. So feel free to take that. Dean says, will you eat it live? No, I'm not going to eat it live, but I will be filming that, and that will happen this week. Yeah, it's happening this week. Because it broke 105. That was the rule. The wager was if Apple breaks 105 at all, then I have to do that. I can send you some links. Gap up, gap down, Patrick. There you go, my man. Those two links. He says, I thought it was a close. Nope, just a pure break at all. Just a break below it. Just touching 105. Good for you, huh? Dave says, what kind of mustard? I think it's just going to be Heinz. Heinz is terrible. Heinz is pretty bad. Let's talk real life. Let's talk expectation, real life trading expectation for a moment. Let's discuss this for 3-4 more minutes. Here's what's interesting about the swing trade results: it is exactly what has happened. I mean, doesn't shock me at all. But in a year of swing trading, so in 12 months, this is something that I want you all to be very, cognizant of. Anytime I trade in swing trading, it's usually 3 months are the months that make me money. So meaning, let's say you decide to join the swing trading room. And you're like, wow, I broke even this month. That's okay. My expectation has always been 3 months are the months that are really solid, home run, huge growth months, or whatever. And the other 9 months are battles. You're breaking even, you're losing a little, or you're making a little. I have no idea when those months are. Usually, they're February, March, sometimes April-ish, sometimes October, November-ish. Last year or this year, it just so happens to be August. It was August and July were the really, really good months for me, believe it or not. So just keep in mind the expectations of trading are very, very high often. And those specific trades are done with stock, not options. Those are with stocks. Option trading, I very rarely buy options unless I'm day trading or very, very short-term swing trading. If I trade directional options, it's on just a few select stocks. Amazon, Apple, those type of things. Pat says, as soon as you complete 3 good months of swing trading, you can quit for the year. Yeah, pretty much. Because that's usually the expectation. If you get 3 solid months in a swing trade, that's a good thing. So we're here in the swing trading class, and we do, if you're a big options fan, we do trade options. We absolutely, without question, trade options. I just usually sell them. And here's the reason why. There's a few reasons, but options are tools for insurance. But when I was 14, I took a personality test, and the number one personality for me was insurance salesman. True story. Life insurance salesman, to be specific. That's what I was supposed to do with my life. So I just sell insurance in the stock market world. Kind of ironic, but that's what I do. All right. Anytime you're selling options, is you're literally selling insurance to somebody. So I usually don't buy options. I usually sell them because there's so many things that work against you in the option world when you're buying them. So I like to, if I'm trading an option, be very, very quick about it. Hour, minutes, 3 or 4 days. You know, that's what. That's just some realistic expectations. Trading is the only company, industry, market, sector, profession, career, job that you can put 40 hours into a week, 4 hours a week, and see zero or negative return. It's the only thing that exists. I could literally go to McDonald's and work 40 hours a week and make money. The allure is obvious. We all know why we are here to trade the market. We all realize that. We know what the markets can present for each and every one of us. The best and greatest expectation I can have, and I can provide as many real life expectations as you want, but the expectation that I will provide to you is this. Ask yourself, how well have you done at something else that takes a lot of time and consistency? And did you see growth in that consistency? And if you did, I usually relate it to, I don't know, being healthy or being the gym. And the reason I say that is truly because the more weight you lift, the stronger you get. The more you go to the gym or the more you run, the better you get. It's just the way it works. In the stock market, it's tough. You always have weight battling against you. And there's going to be a time period, and it's usually the first 2 or 3 years, where you battle and you battle and you battle and you keep that weight consistent and you figure out what you want to do. You keep yourself from injury. You do not blow out your account if you can avoid it. Most traders do, and then they go seek education. My theory is get education. That's why I want to provide it for free, because I'm tired of seeing that. I'm really, really tired of seeing people battle, and then boom, account blowout, and then they get education when they, whatever. I would rather just provide people education so that their success curve looks a little bit more like this, if possible. So there's no massive dip. So just understand that the stock market is very similar to everything else in the world, in the extent that you've got to put in a lot of time, you've got to be consistent, and you've got to follow a plan constantly. It is unlike everything else in the world that you can put time in and still lose, right? Pat says that the real estate sales, there can be zero sometimes. Absolutely. I love real estate, and I agree with you totally. But you're not going to go down. You're not going to lose money not selling in the real estate. You can put 40 hours a week into the market and lose money. The goal is, and the reason is, you are all here because you love trading the stock market. I'm here because I love trading the stock market. You guys are here because you love trading the stock market. It's a great community of traders. It's a great community of people. And our main focus and objective is to give real life expectations, trade the market like actual people, and not just tell you guys, hey, trade the market, you can go buy a Ferrari in 2 weeks. That's not what I'm here to say. I'm trying to give people the most real life expectation possible. Is if you are a doctor, chiropractor, lawyer, policeman, real estate agent, retired vet, maybe you're just retired in general, maybe you're looking for something to do, maybe you're a yardscape owner, business owner, stay-at-home dad, stay-at-home mom, college student. Trading is created for everyone, but it's meant for people who have the discipline and the desire to be consistent. That's the key, ladies and gentlemen. And some people, and most people, will become consistent once they find something they love. We all love the stock market. If we're going to be making some money, we're going to be consistent. That is the absolute focus. Dave says, what can you reasonably expect to do with a $50,000 account after a year or two of experience? If you're brand new, break even. That's a reasonable expectation. If you're brand new, never traded before, starting from zero, working your way to 2 years, keep that $50,000. That's my expectation. Because that's usually what happens. Most traders get a little bit of a spike like this, boom, and then go back down to low, and then they have to come back to where they were. That happens all the time. So I will say, if you do start trading really well and you do start making a lot of money, pull it all out, do something with it, take that $50,000 and protect as much as you possibly can. As wild as it sounds, can you make money trading? Of course you can. Do people make money trading? 100%. Absolutely. The main objective: follow your trading plan, ladies and gentlemen, and protect your capital. Because my goal is to help brand new traders navigate the markets, protect themselves, protect their risk, protect their money, protect their accounts, protect their sanity. Right. Protect their sanity. That's a big one. That's going to be our objective. Nathan says, Jeremy, do you trade futures? I do not personally, no. I don't trade Forex. I don't trade futures. I don't trade commodities. And the reason I provide that explanation is I often say, how many sports does LeBron James get paid to play? You know? Learn to play one and play that one and keep making money. I mean, he plays basketball. He gets paid millions of dollars to play basketball. I get paid to trade stocks and equities. I don't worry about futures. Plus, true story, if I trade futures, Forex, and the stock market, most of you guys know very well, but I would never sleep. There would be no chance. Zero chance of sleep. So that was the other thing. I was like, you know what? Theoretically, I've heard stories and rumors that you should sleep 8 hours a day or whatever it is. I usually think it's 4, but, you know. Dean says, you don't want to Michael Jordan your way around the minor leagues or Forex. Yep, that is correct. Or you don't want to Bo Jackson your way into futures. Just stick to one, focus on one, make money with that one. Patrick says, where can I find more information about puts? Email me, Patrick, and I'll be happy to send you some more information. Of course, as always, ladies and gentlemen, if you ever type in YouTube and you type in real life trading, comma, whatever else you want, real life trading, and then whatever, put sales, cred spreads, counter spreads, something will probably pop up. But yeah, email me anytime you guys need. I'll be there. I'll see you guys tomorrow. Same time, same place. 5 to 6 Eastern Standard Time. You guys absolutely rock. Thanks so much for being here. I'll see you tomorrow. And until then, remember, love life, and trade it. See ya.